Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap. Hope everybody had a great day trading and are ready for maybe less snow than I have. It's been snowing on me these last couple of days, and I've loved every minute of it, let me tell you. Not a lot of S&P 500 companies coming out with earnings next week, but there are a handful. You have Broadcom, you have AutoZone, you have Kroger, Ulta Beauty. So a few interesting names are set to report here next week. So we'll be sure to keep an eye on that. And a happy Friday to you as well, Ed, and hope everybody is doing well. Can you believe it's already been more than a week since Thanksgiving? So, and what a week it's been. Certainly the bulls were well fed this week. And today was really no different. Over in the S&P 500, all of our indexes closing positive here today. S&P running all the way back up and calling it good. They're at that 200-day moving average. That should, again, when we go sideways like this, I always want to respect those long-term averages in particular. But when we do go sideways, I don't put as much weight into them. Personally speaking, I actually think the 50 is a little bit more of a challenge with the way that it's sloping down right now, as opposed to that flatlined 200-day moving average. Now, we're going to have to kind of see how the markets respond to this G20 stuff, as we go into, the Sunday or into next week's open. That can have an impact one way or another, and who knows, what or if it'll do. But probably a good idea, just kind of check the futures there on Sunday, see how the market's taking whatever transpires. Who the heck knows? I always let the charts do the talking and stopped having an opinion a long time ago. But definitely have to like the price appreciation as we continue to work forward. I really think that 50 is kind of that next real level, although I will, of course, always show a little bit of deference to the S&P or to the 200-day moving average. Over in the NASDAQ, we still have a little room to run before we get to our 200 there. Now, we have to think about the good old-fashioned potential death cross, that slow 50 crossing that even slower 200-day moving average. That hasn't happened yet, may not happen, but it's getting close to potentially happening. Overall, we've not really broke resistance or anything along those lines. I found as I was kind of scanning, through the S&P 500 today, very interesting setups in tech, in the communication services areas. I will continue to maintain that this is a more bearish chart than the S&P and the Dow Jones and even the Russell now. Although the overhead on the Russell scares me a lot more, at least in the short term, I think it is a little bit better looking. But I do like that we have some space. We do have a little bit of room until we test really what I would consider the next level of resistance, whether you want to call it the 200, the 50, both, or swing from back here. There's really not a lot of overhead in the short term holding us down. Now, again, this is an area I'll be looking retracement-wise for. But I do appreciate the room that it has to potentially run before we get that. Over in the Dow Jones, it continues to show great strength, working up, closing just shy of the 50-day moving average, as it really has taken a shine this week in a pretty bullish week. Definitely looks nice to see that happen. We are now approaching, I think we can look at this a few ways, and we're going to have to, I think, look at it kind of like we were looking at the healthcare sector, where we had multiple levels of resistance ahead of us, a shorter term moving average in the 50-day, I guess medium term moving average in the 50-day, followed by, that swing back here, which was definitely a nice little break, and then that next level. So I'm going to kind of take it step by step, if you will. But I do like that we're moving up. I do continue to expect that 9 EMA to continue to work up. If we don't see any craziness coming out of the G20, that can, of course, blow that out of the water. But that is what I would like to kind of see. But really, I don't really see any reason past the 50, if this doesn't push us down, why we're not working up to at least test that 25.8. If we can break the 50, I can't see any technical reason, at least, why we shouldn't do that. And, of course, over in the Russell, it continues to just kind of hang out just shy of this old support zone. Again, I think on the one hand, it's interesting because it's, potential double bottom, and we can even go further, right? We know there's a lot of support in this range. We were looking at it when it was falling to that price point. Certainly, this is a challenge. This has to break. But again, much like the NASDAQ, the problem that a chart like this has is it's not a real signal. It's just a break of old support as new resistance, and I guess it's something, but it's not, to me at least, it's not a tradable signal. Ultimately, I'd like to see it pull back, create that higher low, and then take that out. And then I'll be concerned because there's going to be multiple layers of resistance on top of us, but I'll deal with that when it gets there. In the short term, I do think there are potential opportunities to trade to the short side within this area, but I do think you want to put a little bit of have some respect for this support zone. Now, we're a ways away from it. If we start to see some selling, I would be open to the at least idea of trying to work back down towards support. But I do think that we really want to show a lot of respect to that support level, having seen it, confirm bounce 2 times after its, original history there as a breakout point, as a test of a breakout point on a few occasions. So it'll be interesting. But again, much like the last several weeks, really for me, overall from a bullish point of view, it's the Dow, it's the S&P. From a bearish point of view, it's the NASDAQ. And the Russells, that double bottom potentially has me softening my stance on it. All of a sudden, I find myself wanting it to pull back and make a higher low and then break resistance. I don't know what to make of that, but I find myself there. Over in materials, a pretty decent day in the materials sector as we kind of continue to hang out just below that 50-day moving average. That kind of is that test. If that were to break, I think I would look at this as a little bit of a short-term bullish signal. Obviously, what we really need to see is it take out, resistance. And so as we've talked about before, and I'm not going to come off this until the pattern changes, really the buy signal is above 56 in my mind. But after holding support, showing that upward movement, if we can take out the challenge of the 50, I could understand folks potentially being interested in from a bullish point of view. I don't really have strong objections to that. Just keep in mind, there are going to be several levels of overhead resistance that you may have to contend with, whether you're talking about the ETF or individual stocks. The real problem I think that I have with the material sector is it contains energy stocks. And so it's really hard to be bullish on energy for me right now. And we have, some energy stocks sometimes, put into this sector. And it can have a little bit of an impact. It's not heavy, but there are areas that are can be impacted by the energy sector. So that is my kind of why I'm cautious on that right now. Over in energy, I think it's kind of done us a favor, really, no matter where you stood. We saw some downward movement today, putting in a lower high and a lower low. Even though we closed on a green candle, we did put in a lower high and a lower low today. If you were looking at trading into it bearish, which I understand folks were open to, I wasn't because I've just seen too much of that support zone. But I can understand we have been making lower highs and lower lows, and we've already breached that support. So I understand that argument. Started to see a little bit of price depreciation. I could understand that. So if you were interested in trading into this, as a potential bearish retracement, I think you're happy with overall the way it started to develop. For me, I think the clear signals are a break up here or a break down here. Because of that support level, I wouldn't want to touch it. If you made me trade it right now, I would go, I think, bearish, but I'd hate it because of that support level. Luckily, you won't make me do it, so I appreciate that. I think this is an area that we watch over the next couple of days. Now, if we continue to see downward movement and find individual stocks breaking support along the way within the sector, that could be an interesting way, I think, to play it. But sector-wise, boy, that's a lot of support, and that's going to have to break cleanly before it changes my mind. Over in the financials, I had a pretty solid day, ran all the way up to the high that we put in earlier in the week, sold off a little bit from that point on the intraday, but I do think the way it's kind of shaped up is it's kind of given us a potential signal if we break this resistance level, this little few day, not anything substantial, but there's a little bit of an intraday top. Really, I already kind of have an overall, moderately at least bullish outlook on this area as far as within the market. I understand there's volatility and it can change quickly, but if we can take out this little intraday top, what I like about it's kind of lining up with the top back here, but really we have a little bit of room to move. right? Not a lot technically to hold us down. Well, it's not a lot on the ETF, dollar wise, right? It's only, 45, 50 cents. That could present some opportunities in that sector, I think, next week. I do like when we make those little intraday tops. I think they can make nice entry points if you're not getting the textbook pullback or the textbook breakout that we all, of course, like so much. Over industrials, I want to like it more than I do. Personally, another strong day here today as we work up towards that previous pivot. We haven't taken out resistance. We did take out this little consolidation zone, which gave us a very interesting opportunity this week. But really, that's going to line up now with the 50-day moving average. It's kind of conflicting. Right now, we've made higher lows, but we've also made lower highs. So I think that, you could argue that we're in a little bit of a symmetrical triangle. Maybe if you're super bullish, well, maybe super is a strong stretch, but if you were more bullish than maybe the next person, I think maybe you could argue that we kind of came out of it here today or yesterday by virtue of this. I don't think I'd make that argument. I would get it, but if we're making that case, we've already filled up most of it, right? We have to contend with resistance, which is not too far away. I think we just kind of watch how it reacts, going into early parts of next week. I don't really see why it can't continue to work towards and test resistance, though. So to me, at least, there appears to be some short-term upward opportunity there. Over in tech, this tech and communication services were the areas that I found to be the most bearish, when I was looking at charts today. And I wasn't really surprised to see that by any means. Both of them kind of look like, somewhat textbook bearish retracements if you're looking at the ETFs or if you're looking at a lot of the components within the ETFs. We need to see some downward movement. At the very least, need to break below 67, I think, to start to be thinking there might be a selling opportunity for us here. I was talking about a little earlier, and he made a good point. If we take out this little top here, especially if the market responds really positive to the G20 stuff, really there's probably no good reason why it can't go to 70. And so this was a little tougher to kind of gauge, I think, going into early next week. I think we have to see how the market responds to that before we can get too excited, because I could understand, much like the NASDAQ, there's still some room. If we break out, I don't really see why we couldn't run to 70 on the sector ETF. If we break down, it's going to trigger people into bearish retracements, whether it's on the ETF or individual components. So I think this is one that we're going to want to watch closely early next week, personally. But right now, it did almost up a percent today, so it did okay for itself. Kind of developing that little intraday top as the market kind of consolidated these last couple of days. Another strong day for staples as it just kind of continues to work its way closer and closer to resistance. So really not a lot to say that we haven't said before within this sector. We're still in the upward swing. We still have a little ways to go. We're getting closer to that 57 resistance range, but we got a little bit of room to operate. A lot of the stocks in this sector are looking pretty strong too, so that doesn't hurt the ETF. Obviously, we want to keep an eye on that 57 range. We know that's where it stopped last time, and we know we had a little bit of history, of just north of that from days gone by. But there really is a little bit more room for it, in my mind, for us to continue this bullish run before we have to face a real technical challenge, at least. Utilities, they broke, and so the day they broke out and did a clean close. This is the best looking close candle-wise. And percentage-wise, it was a big candle, right? So that's certainly always pretty. But more than that, the only other day that maybe was a strong, as strong of a closing signal was right back here, where we did close near the top. Closing near the top is definitely nice. Of course, it's been a weird ride with utilities as it's been trying to break out. Again, I'm going to want to see another day of carryover. I've just been fooled too many times on a one-day break, and it looks good. I would not fault anybody, for trading into the breakout by any means. I've just seen lately too many times where it can't contain that momentum. Ideally, we'll pull back a little bit, work back into 55, and get some signals there. That would be fantastic if we sell, early in the week, work back into, just north of 55 and get some signals there as a little bit of a pullback to the breakout point confirmation. Let's pull for that. At least if you're on my team, you're going to pull for that. Healthcare is a lovely place. It's been my favorite for a long time. That's no surprise. Having broke out, of course, yesterday. and really basically filling up all of that empty space. Now we're challenging resistance for potential more breakouts early next week. I mean, we are extended. That's a pretty steep move. I didn't expect it to happen like, in that short of a time period, because I never do, but kind of played out like we would expect, just fast, right? We took out one level of resistance and filled up, ran to the next. I would expect it to be a few candles instead of all one, but you never know how fast things are going to move. Broke that and filled up the rest. Ideally, a consolidation for 2-3 days, or even a moderate pullback, and kind of forming a little handily type of situation would be probably technically ideal, in my opinion. But I think we can look for breakout candidates within this sector. It's very strong. Money's definitely coming into it. It's been, like I said, it's been strong. It's definitely one of the stronger sectors. It's been my favorite for quite some time. And now all of a sudden, we're challenging that all-time high, that resistance level. So I do think breakout opportunities are potentially available for us next week. Ideally, we consolidate, maybe take a little bit of profits and take another run at it. It's always hard, but it doesn't mean it's bad. And it's always important to remember to buy something that ran up a lot. Well, it broke out here, but it was already up a lot. Well, that's true. And it's okay if you don't want to trade into that, but it's also okay if you do, right? No doubt about it. But challenging resistance. And I think there were 7 stocks in the healthcare sector today in the S&P 500 that actually put in new 52-week highs. And so it was definitely a good day over there. Services was the most interesting sector, I thought, today, as I was last night and today as I was going through the different S&P 500 areas. I found a lot of trading opportunities, a lot of trade setups, both bullish and bearish, that I liked within that sector. I had, let's see if I can find it really quick. Where are you? I'm not very clean when it comes to this. Here's my service sector, and I had some, pullback, some bear retracement type of situations. Had Charter as a potential breakout type of a candidate. Delta as a potential breakout candidate. Of course, it broke out today and really ran. So I've seen breakouts, I've seen retracements. I found a bunch of service sector stocks that I really liked on both sides of the coin. And I was, I don't know if I was surprised, but I didn't really expect that to be the case. I expected to kind of go in and find a bunch of bearish retracements that I liked and call it a day. But I was really surprised how many interesting bullish opportunities. Yum and Charter, just to name a couple of potential breakouts. Of course, Yum broke yesterday, but I'm always interested in the breakout. As we look at the individual sector, where did you go here, sector? There you are. We haven't, broken out, but we're kind of in that interesting spot where we're about to test that, old support zone, old breakout point, lining up very nicely with the 200. That should present us a challenge. Operative word is should, of course, as a potential area, or profit takers step in, potentially sellers come back in. Again, another one of those areas that we haven't seen it yet, but we are having that 50 getting awfully close to that 200 for that old death cross signal. So it will be something we want to keep our eyes out for. But again, this is one of those areas that, for me at least, is the Christmas rally area. I was very happy to find bullish setups in there because I don't like the way the ETF looks. We still haven't broken any resistance, right? We've rallied with the market. Basically, we've done what the market's done. And so good for you, but that's not enough in my mind. But there are interesting components on the bullish side and the bearish side in that sector, in my opinion. Obviously, let's keep an eye on that 200. The 50 is just right above us. So there's definitely some stuff that can easily put this to a halt in the early parts of next week. But again, if we can push through those, all of a sudden, those are going to be some signals for some bullish traders. Over in the real estate, we are getting awfully close. Another strong day in the real estate sector as it continues to just kind of go with the overall trend, nothing too fancy. But we are approaching 34. That is, as we know, a fairly significant level of resistance that we want to keep an eye on. You can kind of see going way back into here. It was a resistance, and it was a big top for real estate back there. If this breaks, that's going to be a really nice breakout opportunity, in my opinion. Obviously, I'll prepare for it. I won't assume it's going to happen. I'll assume that it's going to be real tough to break. I think that's always the proper assumption. But a strong day is we're getting close to testing it. Don't be surprised if we see some profit taking. Again, ideally, we see some profit taking for 2 or 3 days, build another level of support, take another run, and then break through it, say, next Monday. If we're painting the picture that maybe I would like to see, that would be the case. But we're getting close, and definitely a strong week over in the real estate sector. And then there's, lastly, the communication services sector, your Googles and your Netflixes. This looks like an awfully interesting bearish retracement candidate to me. I don't know which one I think is uglier or prettier, depending on how you want to look at it. The tech sector or the communication services sector on their charts, I wouldn't put up too much of a fight either way. We've kind of worked up, we've kind of started to consolidate. We still haven't seen any really downward movement to kind of get triggers in to these trades just yet. But this area, since its inception, it's done nothing but make lower highs and lower lows. I'm going to assume that's going to continue to try to do that as it starts to show a little bit of weakness. Let's see if we can get some downward movement. Again, one of those situations, if we do break through here, probably not unreasonable to think that 50 is the next stop. If we do take out, this was old support, it's developed as a little bit of intraday resistance. If we do take this out, probably the 50 is the next logical place to assume that it will go. If we start to see some downward movement, I think just looking at this chart, I think this chart is shortable if it breaks today's low on Monday. Personally, for my trading rules, I do think it's very interesting for some bearish retracements. Personally. So a lot of interesting stuff going on over in the sectors. You've got retracements, you've got breakouts, you've got continuations, you've got major challenges of resistance in real estate. So we're in some interesting spots in a lot of these charts going into next week for sure. Over in the metals, in gold, pretty dull, a little bit of back and forth, but nothing really interesting to say, as is usually the case when it comes to gold. Again, I think you could make a moderate argument from a swing point of view that you could buy if we break up above here and work up to 1240, but that is awfully tight type of thing that can happen easily in one day and then sell all the way back down, or if we break support down here. Now, I would argue, while I would understand, assuming the risk to reward was there and you were able to manage those trades, in the time frame that it would likely take to manage them, I really think that those are best suited for potential intraday entry type of trades as opposed to swing trades. The 1240, the 1180, I think those are the numbers that you're still looking at as a swing trader. And I'll probably be saying the same thing next week. But one of these days, that's going to break one way or the other. And it'll be interesting that day, no doubt. Over in silver, we did reach that intraday support briefly and then sold fairly aggressively briefly as that broke. But we did catch our footing, working back up and closing back above that support level. I think this is a little bit more lean bearish than gold for me, but overall, I still look at it from a neutral point of view. 15 at the top, and then a break here, I would definitely be okay with a bearish entry because that would be a clean break. We have that 14, I think it, for me, I know it caused mental issues when it was breaking down here because, I saw that as a bearish signal. But the around $14 kind of kept me away. Now, at least for the time being, looks like that was a good thing. But if we can take out this little load that we put in down here, I think that can alleviate that whole, well, 14 is a round number. Well, that's true, but now we're well below it. I'm going to assume it's still overall in the trading range, though, until it proves me otherwise. But a little bit more on the bearish side, it seems to me, over in silver than gold right now. Boy, the dollar, this is why you trust your trends, right? The dollar, volatile days, it worked into that trend line yesterday after a lot of selling on Wednesday when the market popped. But here we are today, another, strong move to the upside over in the dollar. This really continues to be a pretty, bullish spot. We do have some pretty reasonable overhand. 97.50, a break of 97.50, probably the best technical signal if you're not already in it, I would say. We could potentially buy if we see some upward movement early next week, but we do have some resistance that I would be worried about, at least modestly worried about. So I do think that, wanting to take out that is probably the signal that I'd be looking for. But I mean, really, what do you say? It continues to perform as expected, as they say, coming off of that trend line quite nicely. Now, if that trend line breaks, we've talked before, there is probably the 50 is probably what the next stop is. That's lining up pretty nicely with that 96 support level. Not that I expect that to happen, but I'll kind of prepare for it. So if it does, I can decide if there's anything potentially I'd be interested in doing. Because really, there's not a lot with the way it's developed. If this trend line does falter, probably that nice 96 that we've used many times before, the 50-day moving average, probably the next stop. And as long as we hold those areas, I do think this is overall a place you look from a bullish point of view personally. And lastly, over in our energy markets, another back and forth day. As natural gas is never boring. It's not the easiest thing to build a swing trade on these days, but it's never boring. Another day of kind of topping out, just shy of that 480 range. I really start to think that that's kind of the number that I'm looking at as a close above 480 for a confirm of continuation of this move. Would like to see another week of it do this. If it wants to be volatile but keep bumping it to in the same general ballpark, I'm okay with that, because I do think the break is probably going to be the easiest thing to trade, assuming it doesn't take off like it's been known to do lately. So, of course, that could easily be said. It breaks on Sunday on the open, and by the time we're talking on Monday, it's at 525. And well, what do you do, right? You can only prepare. You can never be upset when the stock gaps above your order or moves too quick and you couldn't get into it, because that's just what happened, right? That's all you can shrug it off, if you will. But another strong day, of volatility over there as we kind of are still consolidating near the top of that trading range. And lastly, over in crude, love what crude did today, which is really a whole lot of nothing. We look at the percent, it's down, 1.25. So maybe that's a headline, but what did it do? It didn't do anything from a technical point of view. Tested that 50, just about again here today as support. I think every trader that I've been talking to, at least, is looking at a break of 50 for another sell signal. Another day of hanging around 50, building that little intraday floor is a good day. I don't like the idea of breaking down on Friday going into the weekend in the commodities market personally. So I'll continue, just like probably most of you, to monitor that $50 range, whether it's something you're buying off of on the intraday or picking at the bottom if you're brave enough to do that. I'm not, but if you are, some people are, at least so far it's held, but I would not want to bet on that. I think, again, the real signal is going to be the break of that. We're getting a little bit closer. That nine's falling down a little bit more to kind of give us that first challenge, so to speak. You'll see that happen sometime where you consolidate for a time period, then that nine ultimately catches up, and then it's either going to have to break above that nine or break below support. And it's harder to break below support than above the nine, I think, but ultimately has to break one way or the other. But I do think 50, I think it did us a favor, honestly, just kind of hanging around 50 for the weekend. Now we can go enjoy some snow if that's your thing. I can complain about the snow since that's my thing, and we can start fresh here on Monday. So, ladies and gentlemen, it was definitely, the bulls definitely took this one. There's no doubt about it. This is the first bullish week we've had in quite some time, in the stock market. Very interesting situations developing. You've got, like I said, you've got potential breakout in healthcare and in real estate. Potentially could happen as early as Monday, right? May not happen at all, but they're close. You've got some interesting retracements in the discretionary, in tech, in the communications. You get some nice upward movement, some really nice looking charts over in the consumer staples. So it should be another fun week as we get into, believe it or not, December. When we meet again. But ladies and gentlemen, that will do it for today and for this week for the market recap. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell if you haven't already, just so you can be alerted to any new videos or streams that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter as well to keep up on some of the things that we find interesting throughout the market day. With that, ladies and gentlemen, remember it's the weekend. So, get through that watch list, get through the scoreboard, get through those reports, be ready to rock and roll on Monday morning, but enjoy time with your friends and family doing the things you love. Make sure you carve out a little bit of you time as well. If you're braving the shopping, best of luck to you. So thank you so much, ladies and gentlemen. As always, it is my pleasure. Get out of here. Have a great weekend. Happy trading, and I will see you all in the next one.